Fausto Pugliese, president of Cyber Trading University.
Most people always focus on the past, where as a professional day trader, we just focus on the future. You can do very well in trading, and you don't have to have a good amount of movement for the stock to go up. Welcome, everyone, back to the Cyber Trader podcast. My name is Fausto Pugliese, your presenter, and I have a new guest here first on the show, Tushar, and another guru, another technician, very popular in the industry. Been trading for a very long time. Looking forward to see what he has to see, what's going on with this market, because it's been a very, very volatile one. And I want to see what he sees with his technician. What he knows and with his technician style, what he sees is going on in today's volatile market. So, Tushar, thank you. Welcome to the show. How you doing?
Well, thank you very much. Thank you for inviting me. I'm looking forward to having an interesting discussion this morning. How are you doing?
I'm doing great. It's been pretty crazy these last couple of days, especially the news over the weekend regarding what happened with the with the White House with we got this new drug that this executive order he signed yesterday. Yes. You got with China now put this pause on stuff like that. Right. It has been if you were short, you were screwed. If you were long, you're probably happy. So so what have you been seeing?
Well, essentially, I think the correct answer to this is the VIX index. So if you plot the S&P 500 on top and the VIX on the bottom, you'll see that the sharp drop in the S&P 500 coincided with a very sharp increase in VIX. And when the VIX index goes above, say, 35 or 40, it's actually a good time to buy. So this is a counter trend signal. And the traditional or the typical example is that when the VIX goes above, say, 40, 45, 50, you're likely to have a bottom that will, that'll be significantly higher a year from now, or say 6 months from now. So essentially, I've been following the VIX. When the VIX went above, so like went to 50, I said, perfect, great counter trend buying opportunity. So I was buying, sort of over there, and then in that general area. And then, of course, then you had this very strong one-day up, right? You had the big bounce that was up many percent. So that one big bar can be used to predict, or as a, if you do the, the extension using the Fibonacci series, you can predict how much higher it could go. So 1.618 times that height of that bar gives you an upside target, which puts you around 6,500 in the S&P 500. So basically, you don't want to be short volatility for sure when you're having so much volatility. And then you've got to think counter trend, because so normally I'm a trend follower, but when you have these extremes in volatility, you have to think counter trend. And you don't want to sell into that extreme pessimism, and you want to buy. So it's really hard to do, because the news is so intensely negative at that moment, and people are projecting great declines or even more severe declines. So then the test of the pudding is, you have this bounce, it's going to come back down. The retest goes, where does the retest end, right? So does it go all the way below the previous low, and so on? So we had the retest and a bounce back up, and now if you look at the high to the low of the range, whenever you have a 75% retracement of that range, that usually means that the downside is over. And of course, we've got the a 20% bounce off the lows. So in theory, we're in a bull market.
So you think it's still too late? Because I mean, being a day trader myself, just going out there and trading with these traders, everybody's looking around and I mean, listen, we were trying to catch a falling knife, which you're not supposed to do, but the knife kept hitting the floor. So is it too late to get in, or do you think it's
okay? The correct answer is that it depends on your time horizon, right? If you're a long-term position trader, you don't mind holding for many months, it's not too late to get in, because the market can make a new high and so forth. So what you want to think about is seasonality in this context. So now, assuming that the volatility is over and the market can go back to as usual, then we should get a summer rally, then a sell-off in August, September, October, and then a bounce starting in November. So if you think of the seasonality, really November generally marks the low, or the end of October marks the low, and then you have a rally all the way through July or August of the next year, and then we have again a pullback. So what I'm hoping is that all this volatility is behind us, and we'll go back to the normal seasonality. But of course, these are what I call event risks. Something can still happen that'll change this logic or this dynamic. But the VIX is telling me that we've suffered through the emotional upheaval of going through the the whole announcements and whatnot, and now we're back to sort of more or less usual trading conditions.
Now, Tisha, how many years you been doing this so far?
30 years or more.
30 years. Have you ever seen a market like this before? And might see something like how history is probably repeating itself?
Oh yeah, this happens all the time. Like one of the beauties of the new traders are, oh, this is it. We've never happened before. No, that's not true at all. If you look at 2020, right? March 2020, when we had the whole, the COVID, we had a huge sell-off and a rebound. But there we got a V bounce because we had intervention we had a fiscal intervention and monetary policy intervention. In this case, we didn't have a fiscal intervention or a monetary policy intervention. So it's difficult to get a V bottom. So we had a little bit of a thing. But the fact that it was driven entirely by a very limited set of circumstances, and those circumstances may be reversed, tells you that we don't need an intervention. We basically have a sort of not a V-ish bottom. If you use a weekly chart, it looks like a V. On a daily chart, it obviously doesn't look like a V. But so I think that this is the VIX is the best indicator. So if you want to just go back and look at the history of the VIX, how many times has it been above 35? You'll find plenty of examples. And what did the market do later? So the beauty of looking at a chart is we're not looking at the context, right? Right now we have the context, this happened, that happened. But if you just look at the chart from last year before, 5 years ago, we don't have the context. So I think that's the beauty of technical analysis, that we can look at a chart and delete the noise and not be driven by the context. So it's a matter of, are you an information flow trader, or are you a price trader, or whatever, technical analyst of some sort?
Now, is there any certain industries you're looking with the VIX that you want to trade with, or is this mainly just the VIX you're trading off?
Essentially, again, let me start again. So if you're just a regular investor, you've got cash on hand, VIX goes up a lot, you can buy just the SPY or any of the traditional S&P 500 type, or a mutual fund or something. If you're a short-term trader, you obviously want to shrink your trading horizon. So if the volatility is high, you want to trade a 1-minute chart or a 5-minute chart as opposed to a 1-hour chart, because the moves are very, very compressed. And then if you're a even longer term trader than that, you're saying, basically you're going to short volatility. So if you're trading the VIX, volatility is high, and you want to trade options, you want to short, the volatility as much as possible. So you can short volatility by essentially, shorting the triple Q or something like that, because that's where the volatility is showing up on the equity side. If you're on the futures side, no problem. You get so many options in terms of selling volatility. If you're trading options, very easy to sell volatility.
Now, when you trade the VIX, are you doing more of just buying the VIX itself, or are you doing more of an option play on it?
No, I'm just using the VIX as a benchmark.
As a benchmark.
Just give me a sense of the environment. So the VIX is below 20, market is trending, I can use trend following strategies. Or say, I'm just using round numbers here. If VIX goes, say, above 20, between 20 and 40, then I got to shorten my trading horizon. If it's above 40, it's a straight counter trend buying opportunity. So there, what you can do is you can shorten your horizon and do short-term trend following, because say you can be short the market and then market will bounce, but then you got to use a really short-term chart. You can't use a weekly chart. You got to use a 5-minute chart or a 3-minute chart.
Now, regarding about your strategy, for the traders that are listening right now that use indicators, how would you explain the value of the price action?
So the price action follows the news flow. So if you look at price action, the market is reacting faster and faster and faster to information flow, and information arrives randomly in the market. So price flow is random. So the first thing you have to recognize is that the markets are random, and we cannot underestimate the randomness of the market. So that's rule number one.
Okay.
So markets are random, and I sort of think of it like a fly sitting on the back of an elephant. The fly says go that way, the elephant lurches that way, and the fly says go that way, the elephant lurches that way, and pretty soon the fly thinks, hey, I can ride the elephant. Not true. So you got to kind of have to respect the randomness of the market. Then the second thing is you got to say, I'm a trend follower. So by trend follower means I want to break out and I want a trailing stop. So for any trade, you need 3 things. You need an entry point or exit rule, entry rules, exit rules, and money management rules. Now, underlying this is what's the time frame? Is it a daily chart, a weekly chart, or a 10-minute chart, or an hourly chart? But you can consistently use trend following principles on the same chart. So, for example, I think you were talking about what is that? Sound, SOUN yesterday, right?
Right.
Massive breakout, and then a trend following exit, and you can get out on trailing stops. So if you look at my work on say in TrendSpider, I have different types of trailing stops that are very reactive to the market. I have adaptive indicators. So a long time ago, I was the first to invent an adaptive exponential moving average. So essentially, I've built over time adaptive indicators that automatically adapt to the market action. So even though I'm using breakout, I'm sort of filtering it somehow, because if you take a step back, every great trend has a whole bunch of 20 bar breakouts, but not every 20 bar breakout is a great trend, right? So you sort of have to have some filter. And then once you're in, now the problem is where you're going to get out. So then you need to have an exit strategy. And of course, before you get in, you also have to look at your money management and risk parameters and trade sizing and all of that.
So
So
is
trade
that how
size,
you basically approach in the market when you see stuff like that? Is that what you're looking for? Is that what you're
yeah,
teaching?
I'm a breakout trader, and then
Breakout.
I'm looking for a sort of a breakout with some momentum, and I have indicators that tell me, okay, I want to take this breakout. At that point, once I decide to take the breakout, then it's just a matter of, okay, what's your trade sizing, where you're going to get out. And I like to use trailing stops, which is kind of old fashioned, but it gives me a set of discipline, because it says I know what to do. If it hits my stop, I'm out. So I'm never going to get in at the exact low unless I'm counter trend. I'm not going to get out at the exact high unless I'm counter trend, but I'm happy to trade in the middle.
So Tisha, I mean, you train a lot of people. What are the common mistakes that people are making that they keep failing?
The single biggest mistake is the market asks you every day, what do you believe? And you can only trade what you believe. And people who are not successful don't believe in anything. So let me give you an example. If you put on a trade and you're making money, you say, I better get out, I better get out, I'm making money. Then you say, if you're losing money, I better get out, I better get out, I'm losing money. So you start here, then you better get out, you're making money, you better get out, you're losing money, better get out, and your position is zero. So the number one question you have to ask yourself as a trader is, what do you believe, right? In your case, you may believe trading intraday, and then you may have whatever, you're looking at the order flow and you're saying, I got here, there, okay, I'm buying this and I'm getting out. So you have clear beliefs and your conviction that I can implement the strategy, whether the markets are good or bad, going against me or for me. So the way you have to think about it is that the math is always the same. So you have to look at the number of winning trades and the number of losing trades. Then you get your average winning trade and your average losing trade. So you have to look at the ratio of your average winning trade and your average losing trade. And that ratio should be, say, 3-1. If your average losing trade and average winning trade are 1-1, you're not going to make money. That's just the way it is. So I think for every trader, whether you're a new trader, they say there are old traders and bold traders, but no old bold traders. And the summary of that is, your market is always pushing against you and asking you, what do you believe? And you have to be able to say, this is what I believe, this is what I stand for, and I'll fight this. This is a fight. This is the hill I'm willing to die on, so to speak.
So how did you come to figure that on your own? I mean, listen, there are so many gurus out there. There's a lot of people get this bad information. They don't know who to trust. I mean, like you said, you don't really have a big social media presence. You built it on your own, but there are people that have great social medias and they're terrible, and people get advised the wrong stuff. So how did you go about to make sure that you found the right way of learning how to trade and to get where you are today? Because like I said, there's so many styles out there.
Yes. So I like to say that I learned not by a process of trial and error, but by a process of trial and terror. Because you put on a position that goes against you, you're like, sweating bullets. And I have a PhD in engineering, so I started off on the quantitative side of the world, and I disassembled and reassembled the major technical indicators. So I really understood the math of what was happening. And then I decided that I was going to trade breakouts. The reason for that is, if you look at moving average crossover type systems, you get a lot of false signals. So you want to get as clean signals as possible. So breakouts give you very clean signals. So once you have a clean signal, then it's up to you. Are you going to trade it or not? And once you decide to trade it, then there's a whole trade sizing problem.
Right.
You risk 1%, 10%, 100%. And then there's an exit problem. And you have to commit to that. So it's a combination of, I like to trade breakout. And I did all my own research. I learned by the school of hard knocks. I made plenty of mistakes. I lost money. I had, believe me, I was a professional money manager. So for 20 years, I didn't sleep at all. I slept barely 3 to 4 hours a night for 20 years. And when I stopped trading professionally, it took me 2-3 years before I could even sleep more than 6 hours a night.
Wow.
So I
Okay.
hardly slept for about 20 years because I was constantly doing research. I was constantly checking my ideas. I should trade, the futures markets with the effective my effective size was many, like if you take the leverage, it was like approaching $1 billion. But imagine carrying all that trade yourself. I like to joke that I could sit in my shorts in the basement and compete with the Goldman Sachs and the big trading houses of the world and the major money managers of the world. So it's you have to commit to it. You have to realize you're going to make mistakes. And as I said, okay, let me take a step back. So the first thing is you have to keep things simple. The simpler they are, the easier it is to stick to it. So if you think of a vertical axis as profit and the horizontal axis as number of indicators, as your number of indicators increases, your profit looks like that. It
Right.
improves a little bit, and then it gets worse and worse as you get more complex. So keep it simple. You know what you believe, and start trading small. You can trade 1% or 0.5%. You can say, I'm just going to trade. So here's a question. Are you going to trade this way once? Are you going to trade this way 100 times? Are you going to trade this way 1,000 times? And people who don't succeed trade once or twice or thrice. They're not looking at the problem as saying that I could randomly start. Suppose I get 10 willing trades in a row. I said, I'm a genius. This is going to make me forever. And then you get a losing trades. If I get 7 losing trades in a row, I'm going to say, this is it. I'm never going to trade this again. But diabolically, that trade system could make you a whole bunch of money in the next, 1 year. So, learn to test, take a step back and say, be systematic, know what you believe, trade small, just like get your feet wet, understand your way around the system, and trade breakouts. I mean, breakouts like the easiest thing to trade. And even though this is hard, don't listen to anybody else. Like don't listen to me or you or anyone else, because the more inputs you have, the more variables you have. And so now you're back to this problem of too many variables driving your trading process.
I look at the breakouts that you mentioned. It's pretty funny because there's a lot of stocks that we're seeing are breaking out. Like we were
Yeah,
trading this morning, we were trading Uber, and
right,
that just broke all-time highs. And
right.
and there's another couple of stocks that we were looking like Archer that had earnings yesterday, whatever. But on the reverse side, where I think a lot of people also make a mistake, where it's also on the loser side. I mean, like when you talk about a stock that breaks, what about a stock breaks all-time lows? People are
Right,
like, well, how
sure,
much lower could it go? And it
sure.
says, oh yeah, there's a number. It's called zero. You know what I mean? Like, whatever happened? I'm like, well, because sometimes you have stocks that break out, and like
Right.
there is no zero. It's just it could
Yeah.
be endless. I mean, you could have a $90 stock go to 900. You could have a $9 stock only goes 9 more points. So the common mistake that you make. Listen, we've all lost money. You've lost money. What was the biggest lesson you would say like that helped you to not make that mistake? That made you a better trader today? Because I think that's what people have to understand. You're talking about breakouts. I'm talking about losers. I like to focus on losers, not the winners, because the winners take care of themselves. Just the losers, everyone blows up their accounts. How'd you fix that problem? Something that happened to you to let everybody know, so they don't make that same mistake.
Okay. So remember the word or the phrase top scholar, like Coca-Cola, top scholar. So top stand for take our profit slowly and cut off losses at once. So if you remember top scholar, it's a really good trading principle.
Okay.
So number one, uh, if you have let's start again. Suppose you have 3 rules, right? You have entry conditions, exit conditions, and trade sizing. So once you are in the trade, the only thing that matters is your exit conditions, and you have to be willing to take a loss. You cannot say that, well, if I wait tomorrow, it'll bounce. So if you look at any chart of any futures market and you say that it came all the way down here, that was the last tick, and then it bounced. I'm the guy on that last tick, because I
Okay.
get stopped out and the market reverses, and that happened to me a million times. If you see the top, the up, like whenever you see a reversal, the market goes up. There's a last tick, somebody buys and it reverses. That last tick is me. I've been stopped out so many times because I buy, it goes up, it goes one tick past my stop, so I'm in, and then it reverses and takes me out. So you can't take it personally. That's what I mean by random markets, right? Markets are random. So if you have good risk control and it goes up, takes you down, okay, next trade. And it's very difficult to change your mindset because you get hung up on one trade and you say this, that. No, you have to think about it as saying you can improve your mental approach by saying that I have clear entry rules, clear exit rules, clear trade sizing rules, and I'm going to do this for the next 50 trades. Are you willing to take the next 50 signals without a single change?
So
And I
Tisha,
traded for 15 years.
I'm glad you bring it, but that's my, I think that's leads to my other question is like, how do you personally coach somebody through the noise of that complex in today's modern markets?
Okay, so answer is, first of all, pick a time frame, right?
Okay.
You can't jump around time frames. You pick a 5 minute chart or a 1 minute chart or a daily chart or whatever it is. Pick a time frame. Then you shrink your trading universe. Instead of saying that I'm going to trade 10,000 stocks, you say I'm going to trade 100 stocks. So you can take QQQ, the 100 stocks in the QQQ, or 30 stocks in the Dow, or the 500 stocks in S&P 500. You shrink your universe.
Okay.
So you see, let's simplify. I'm using daily charts. I'm only going to trade the 30 stocks in the Dow Jones Index. And I'm going to just take a breakout. So every time there's a 20-day high, I'm going to buy 10 shares of whatever. And if it is a 5-day or 10-day low, I'm going to get out. So these are like elementary rules that are totally robust. There's no optimization of any kind. And so ask yourself, maybe I'll just buy one share. So could you just execute these rules without a single change for 6 months? And most people won't be able to do it. That's what I meant by what do you believe, right? Most people don't believe in anything. They say, I want to make instant money. As you said,
If
it
you don't
started
believe in it,
19.
I tell them, what are you in this business for? Just leave. I mean, you're wasting your time. I mean, that's I mean, like you mentioned earlier, I use that all the time. That one share trade today, there was a stock today. I blow your mind. Okay. And I didn't buy it, but I almost did. But there was this stock. I still understand the stock RGC. It ran from beginning of May. It was at like $27. It hit a high of like 560. I mean, like I would never trade that stock, but for one share, you know what I mean? Like you want to know what's going to happen. The worst thing that can happen is you lose a couple $100. But if you can't sit there and not do anything and watch,
Yes, I agree with that. And the other thing is, remember, suppose you say I bought one share. At that point, you know where you're going to get out. You have a trailing stop. So if you put a trailing stop in, you don't have to worry about should I get in, should I get out. Let the market get you in and let the market get you out. So if you say I'm going to buy I want to buy a 52-week high. I'm just picking a number. And Cardinal Health made a 52-week high. And you like the stock, okay, I'm going to have one share of Cardinal and I'm going to sell it at the 20-day low. Put in a stop at the 20-day low, and when the stop changes, you change the stop. Enter the order good till canceled. The market will get you in, and the market will get you out. What do you have to do? All you have to do is change the stop, which takes you maybe like a minute, and you're done. There's nothing for you to do for the rest of the day. So what I'm saying is that commit to a process, a set of rules, which means that you got to be able to test them, right? So learn to test. I mean, if you want to say that I want to be a trader, the first thing you should do is learn to test, learn to back test, understand what back test means, understand how to back test, what are the rules, does it make sense, am I willing to take this trade?
Make it sometimes you overanalyze it too much and then you don't trade. You know what I mean? Like, you really think about it too much. I mean, sometimes you got to hit the button, right? Eventually, I like to do a little bit in a way where I kind of teach everybody, because everybody has this different styles. Like you're saying, back testing this and this and this. For someone, I try to tell them, like someone asked me the other day, how do I trade options? Everyone's trading all these different options. You know what I tell them? Just buy one contract.
Yeah.
And just buy anything. And then, what was that supposed to be? Just buy and just see what happens. Right. And then just see how the execution system works, how it's tracking your funds, and you see you making money, lose it. And then you could sit there and implement all this crazy stuff into it, But I think like a lot of people, they have there's this whole saying, technical analysis paralysis,
paralysis of analysis.
Yeah.
Well, I agree with you completely. And that's what I mean by saying, and I think your analogy is great. Suppose you say, I'm going to buy one, think of Microsoft, like Microsoft or Apple, like these are gigantic companies. They're not going to go out of business tomorrow. And you say, okay, I'm going to buy one, December option, or I buy, 10 shares of Microsoft, and I'm going to hold it till December, or I'm going to follow some process. Okay, this is the school of hard knocks, what is your risk preference? Most people don't know that, right? You can tell them, but until they start trading and risk their own money and see the market jumping around, they won't know what their individual risk threshold is, right? And part of the problem is people are risking too much or they're risking too little.
I think I'm risking. You're right. I think a lot of people are risking too much, and they're trying to get desperate, and they really want to go out there, and they're trying to make money that they don't have yesterday. And that's why it is very important to qualify everyone to make sure what's for you. But listen, not everyone can trade, I mean, you can get into it. But like, I guess everyone just feels like there's just so many styles, and we have so many gurus like you that come on the show. And if you're a technician, if you're like, I'm a day trader, if you're an options trader, futures, or gold trader, listen, like I was teaching my wife how to trade, and she listens to my videos and everything, and I love it. She still doesn't get it a little bit. I'm like, I'm going to teach you how to trade. Just buy one share. She's like, I open up her account, and then now all of a sudden the girl, like, she knows what she's doing a little bit. Oh, I like this market. I like that market. Oh, I heard about this and that. But one thing I think, like you just mentioned, is very important. Just don't risk what you can't afford to lose,
Okay. So think about cooking, right? Like my sons are like fabulous cooks, and I
got a home cooking channel
bad
myself.
to horrible cook. So how do you start cooking, right? You got to start somewhere. Like, you burn something, you drop something, you break something, but
you
got
cut your finger,
whatever.
burn your hand with hot water.
I've had my fair share of, well, let's put it this way. I've had my fair share of cooking disasters. So my point is, but I love making ice cream. I'm really good at making ice cream. So, but you got to start somewhere. Like, you got to start. If you don't start, you can't learn. And then you got to figure out, like, do you like spicy food? You like more salt? You like more sugar? Whatever. And trading is just the same way. It's like an experiential thing. It's not a virtual thing. You got to do it. And when you do it, then you find out, well, I like this better, I like that better, or whatever. Like, everybody has a particular risk profile and a particular dynamic preference, right? Like, do you want something that moves rapidly? Are you willing to kind of sit around? And do you want a big, like, large cap, small cap, whatever? So the important thing is, I understand that trading is much more accessible. Like, technology, like, compared to when I was doing technology, it is fabulous. I would have paid like millions of dollars just to get all the technology 20 years ago or 10 years ago. And then the second thing is, there's too much choice. Like, you go to a restaurant, you're an infinitely large menu. Well, we can't have an infinitely large menu. So that's what I mean by, like, focusing down. Like, reduce the universe you want to trade, reduce the the complexity of how you're trading, simplify it, and then start small. I mean, what's the big deal? You don't have, we're not all going to compete with Goldman Sachs and somebody with $10 billion. We got to start somewhere.
Well, listen, Tushar, we're going to finish up in a way. I'm going to leave it off like this. I am definitely going to use that metaphor because I have a company called, I started, like, with my trading. People are like, what do you do all day? I started a company called Fausto Home Living, and I just love cooking. I take care of chickens. I got backyard garden, stuff like that.
Awesome.
But, and like you mentioned, like, everyone's always depending on, make me this, make me that. But you know what? Until you try it yourself, once you learn how to make it and see what you like, learn it, and and you go from there. And it's like trading the market. Like I said, we have so many types of people, different types of styles, the way they trade here. And like, you're not going to know until you actually do a trade in that market to figure out and how it actually works. So before we go, any last minute advice you can give the traders, what they should expect in the future, what's going on at the market, anything they should do to protect themselves, to not, to not hurt their account, anything you could, any last minute feedback?
Well, remember, trade small and manage your risk and have a trailing stop. Even if you just remember one thing from today, use a trailing stop. That'll save your bacon more often than any cooking strategy you can use.
Good. Well, Tushar, thank you so much for being here. And listen, and let's post a link up there for everybody could just find out a little bit more about him. Rich, you got the link. We could show everybody how to get a hold of Tushar over here, and then we'll be able to. We're going to have you back here. We have a Cyber Expo for everyone here. If you want to come and join that event, the Cyber Expo, we'll just put it right here. There's our free workshop right there. Just take your phone, scan that QR code, and we'll get you in contact with Tushar. All right, everyone. Thank you so much for being here, everybody. And we'll see you tomorrow for the next episode at the Cyber Expo.
Thank you, Fausto. Thank you for inviting me.
Thanks for being here.
Bye-bye.